Good morning, everyone. Welcome back to my YouTube channel. In today's video, I will talk about dividend paying ETFs. Currently, I own 8 different ETFs in my different portfolios. I will go over with you all 8 ETFs. Some of the ETFs are designed to mirror S&P 500 performance. Some of them are paying monthly, some of them are paying quarterly. Most importantly, I will share with you a method that I created for you to pick up a better ETF from a same class. I will also share with you the criteria how I choose my ETFs. If you are new to my channel, please subscribe, like, and comment. And if you'd like me to subscribe you back and support your channel, please also indicate in the comment below. Without any further ado, let's dive right in. What is an ETF? ETF stands for Exchange Traded Fund. It holds a basket of securities in each ETF. It trades on the stock market just like a stock. ETFs are highly transparent. Their underlying holdings are fully disclosed on a daily basis and are highly liquid. ETFs invest not only in stocks but also in bonds, commodities, and currencies. ETFs currently is one of the fastest growing segment of the investment universe. By holding an ETF, it helped you to avoid single stock risk. It adds extra layer of safety to your portfolio for its longevity, because one single stock, no matter how big it is, how good it is, it may go down the drain. Down the road, you never know. In 20 years, the stock may even disappear. By holding ETFs, because the fund manager constantly adjusts the component of each ETF, it takes away a lot of studies and work and worries from you, and then your ETF can help your portfolio last much longer in a much safe way. First, I will go over with you 3 ETFs that are designed to mirror S&P 500 benchmark performance. They are VOO, SPY, VTI. The criteria I use to pick up the ETF, I will focus on expenses ratio, because the more expenses ratio, the less money you will make and more to the ETF manager's pocket. Ideally, you will choose expenses ratio that is less than 0.10%. And then, of course, I will look at the dividend rate, the price range of the ETF, the dividend payout ratio. Some of the ETF tell you, some of the ETFs don't. The annual dividend in dollars, actually the ETF paying you. And then the momentum is very important. Is that in line with S&P 500? In this case, yes, because VOO, SPY, VTI, they are designed actually to mirror S&P 500. And then I will look at the dividend growth rate and then in how many years. In VOO case, the price is a little high, $306.49. It's currently holding 523 different companies. The top 10 holdings are very, very important in those ETFs. The top 10 holdings in VOO are Microsoft, Apple, Amazon, Facebook, Google Class C and Google Class A. Berkshire Hathaway Inc. Class B, JP Morgan Chase, Johnson & Johnson, and Visa. The top 10 holdings in VOO occupies about 23.5% in the entire 523 companies it chooses. VOO, of course, it stands for Vanguard S&P 500 ETF. The second ETF is SPY, stands for SPDR S&P 500 Trust ETF. The current price is very high, $333.48 per share. Holds 506 companies in this ETF. The expenses ratio is higher than, almost tripled. VOO is 0.09%, and dividend rate is 1.67%. Payout ratio is 54 0.76%. Also almost doubled of VOO. Annual payout dollar amount is $5.62 per share. The momentum, of course, mirroring S&P 500 benchmark. Dividend growth rate is at 7.93% in consecutive 10 years. The third one I mentioned is VTI. VTI stands for Vanguard Total Stock Market. It representing the total stock market in the United States. The current price of VTI is at $169.89, holding 3,587 companies in this ETF. Expenses ratio is relatively low, 0.03%. Dividend payout rate is at 1.69%. In dollars is $2.90 per share. Dividend payout ratio is also slightly lower than SPY, is 39%. And the momentum is mirroring S&P 500, slightly lower than both VOO and SPY. Dividend growth is higher than SPY at a 9.22% in consecutive 10 years. Here comes the most interesting part. I noticed that VOO, SPY, VTI, actually, they basically holding the same top 10 holdings from Microsoft, Apple, Amazon, Facebook, Berkshire Hathaway, Google, JP Morgan, Johnson & Johnson, and Visa. The only differences is just they have different percentage in their sectors and different percentage in their top 10 holdings. So how do you choose one of the better one from VOO and SPY, since they are both representing S&P 500? I created a method to show you exactly in dollar amount which one is better perform. So I copied the data from the other page, VOO and SPY. By just looking at these numbers, it's very hard actually can tell which one performed better. And also I copied the data of VTI in case someone interested purchasing this ETF instead of the S&P 500, the best 500 company in the United States. The method is like this, very data oriented. So assume you use $100,000 in each ETF. So you use that $100,000 divided by current price of VOO to show you how many shares you can purchase. In this case, you can purchase 326.27 shares of VOO, and then as annual payout rate $5.57. The dividend payout in 1 year is $1,817.35. According to its expenses ratio, 0.03%. In $100,000 you paid, you have to actually take out $30 to pay for the expenses. All right, so in total a year, you actually getting to your pocket is $1,787. In SPY, you use the same method to calculate with the shares and dollar amount they pay out. Actually, you only net $1,595 per year. It's much better that you choose VOO versus SPY. All right, let's do the comparison for VTI as well. So you use $100,000 to purchase VTI and get the different shares times the $2.90 payout in a year, you get $1,677 per year dividend. It's better than SPY but less than VOO. So if you want to choose one from S&P 500, VOO is the answer. And then if you want to choose one to represent S&P 500 and then one from total stock market, then you can choose both VOO and VTI. Most of you wanted to earn the highest possible dividend, either in their ETF or in their stocks. So I give a pair of high dividend earning ETF for you to choose. One is from Vanguard, one is from Invesco. VYM stands for Vanguard High Dividend Yield ETF. SPHD stands for Invesco S&P 500 High Dividend Low Volatility Portfolio ETF. SPHD pays out monthly. VYM pays out quarterly. The current price, SPHD is almost only half of what is for VYM. And then SPHD holds 51 companies in the S&P 500 list. VYM holds 402 companies. The dividend payout rate for SPHD is higher than VYM, 4.17% versus 3.03%. However, the expenses ratio in SPHD is much higher than VYM at 0.30% versus 0.06%. It's even higher than the percentage I suggest you to choose from. I suggested earlier in my video, I said you better choose something less than 0.10%, but this one comes out 0.30%. The momentum, they are very similar. SPHD has a little bit higher dividend growth rate, 10.97% in the recent 2 years. However, VYM has longer dividend growth in years, is 9 years. So which one to choose if you must to choose? High dividend yield ETF. I'll show you the result in data. So I copied the data from the top sheets to show you VYM and SPHD. Again, by looking at these data, doesn't matter how long you're staring at it, it's impossible for you to tell which one is better. So I used this same method I created. $100,000, assume you purchase each ETF and then calculate how many shares you can get and times the annual dividend payout in dollars to get how much actual dollars you get from this ETF and minus the expenses ratio. So in the case of VYM, you actually get $2,979. Dividend payout minus yearly expenses. I assume you know how I calculate the $60 per year, right? It's just the 0.06% times $100,000. You get $60 per year. For SPHD, you use the same method to calculate. Even the yearly expenses is $300, is much higher, 5 times higher than VYM. You still get higher dividend payout each year, $3,883 per year versus $2,979. It's almost $904 higher. On top of that, SPHD pays out on monthly. If you compound interest monthly 3 times more frequent than VYM, your money grows much faster. The key here, SPHD has much lower, almost half of the price of each share, and also the payout dividend rate is higher. All right, 4.17% versus 3%. That makes the huge difference. So no brainer, you should choose SPHD versus VYM if you must choose. A lot of people love REITs, real estate investment trust, myself included. However, pick the right REIT stock is a daunting task. You never know the high-paying dividend stock for the REIT. Is that a good one or bad one? Is that a downtrend or uptrend? Is that sustainable? Is that profitable? Right? Lots of questions around that. I choose the one ETF from Vanguard. It's called a Vanguard Real Estate ETF. It answered all your questions. It holds the top 187 REIT companies, and then it pays you the dividend rate or yield is 3.17% in a year. Current price is $99.57, and expenses ratio is 0.12%. Payout ratio is 43.58%. Momentum, which is the total growth of the ETF, including the dividend payout, is 44.76%. Is much lower than S&P 500 benchmark performance. However, because it's REIT, it's not designed to mirror the S&P 500 performance. And the dividend growth is at 1.5%. The top 10 holdings for this VNQ ETF is Vanguard Real Estate 2 Index, American Tower Corporation, Crown Castle International Corp., Prologis Inc., Equinix Inc., Simon Property Group, Public Storage, Welltower Inc., Equity Residential, Avalon Bay Community Inc. The top 10 holdings occupies 41.55% of all the holdings. One sector I think is recession-proof and then market downtrend or correction-proof is utilities. Because doesn't matter what kind of market it is, people has to use electricity, water, energy to sustain their life. So therefore, I also picked the Vanguard Utility ETF. It's called a VPU. Current price is at $154.81. It holds 89 utility companies in its portfolio. And expenses ratio 0.10%. Dividend yield is at 2.6% yearly. Payout ratio is only 22.65%, which means this ETF has a lot more room for its dividend growth. Annual payout dividend is $4.14 per share. Momentum is even much better than S&P 500 benchmark. It is at 83.45%. And dividend growth is 5.5% in 3 consecutive years. Top 10 holdings occupies almost 53.61% of the total portfolio. For you to have a very balanced, sustainable portfolio, you must have the bond component. That's why I choose Vanguard Total Bond Market ETF. It's called a BND. It pays out on monthly basis, so you can compound your interest much frequently and then grow your money faster. It has 17,668 different bond holdings in this portfolio. Mostly is from United States Treasury notes. The government component is about 46.6% in this, and securitized bond is 24%, corporate bond 26.4%, cash and equivalents is at 2.31%, and municipal bond is about 0.65%. The top 10 holdings occupies only 3.50% of the total portfolio because the base is so large, 17,000 something of the holdings. The current bond price is at $85.8. Annual dollar payout is $2.26 per share. Momentum is 18.8%. It's much lower than S&P 500 benchmark because it's a bond. It's very stabilized investment tool, so it doesn't go much. Dividend percentage increase is at 0.76%. It doesn't increase as much. It's stable as its performance. But it's in consecutive 3 years. The expenses ratio is very low as well, 0.04%. This concludes my ETF video for today. I hope it will shine some lights for your overall investing strategies. For some of you who are new to the market, just by selecting ETFs from different sectors may help you to create a very diverse and very safe portfolio for a long term. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.